market moves higher into CPI. What happens next? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about a few different paths, but most importantly, we talked about the fact that structure mattered and whether we saw an impulsive or a corrective move up would tell the story. And we did see the market continue to move up into CPI, and it does appear to be corrective at this time. Now, it is still early, and that can change, but overall, the structure would be labeled as corrective. So the question is, what happens next? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the Nasdaq. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the chart, I showed you a screenshot of our indicator yesterday that we created. It's an algorithm that is a day trading and swing trading algorithm, and I wanted to show you what it did again today. This time we're going to look at it live, so we're going to jump right into trading view here. And so yesterday we talked about, we had the four signals. You had a sell right here that was very successful, a buy that was very successful, a sell that was very successful, and a buy that was successful. Today you had this sell signal that was very successful, a buy for a small win, a sell that was very successful, and then a buy that was very successful up until it got into resistance. And then when it looked for a couple sells, those got stopped out. And then, of course, at the close, it was trying to sell here one more time. But overall, we got another 1, 2, 3, 4 signals that were very successful signals. And if you know anything about day trading, you know, you're getting into this at 546. The low was at 543 and change. That's a 3-point move in the SPY. And if you just had 10 contracts, that's $3,000 on one trade. Right here, this buy was at 544. They closed around 549. That's 5 points up. Right here was a 2-point drop. So these are catching big moves. It's getting you in where you need to be. It's an incredible indicator. Is it perfect? Of course not. It's going to have its losses just like anything else, but it understands when and where the changes are, and it tries to track them. So if you want to be part of this winning team and get part of this indicator, you can either sign up later in the video, or I will have the indicator out for availability to the public in about a week or so. Now let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And as it stands right now, I do have this labeled as a corrective move, with the 1.0 being around the 55.27 area and the 1236 being around 55.50. These are two incredibly important areas for resistance. You have these breakdown candles at both of those areas. They're also where you would expect a C wave to hit if you had an A, B, C here. And so as of right now, those would be the critical areas I'd be watching for the bulls. If the bulls can push through 55.47, then they could turn the market bullish, and ultimately they need to push through 56.05. That's the big key number, the 764. But getting through this 55.47 area would be the first step in the bulls taking back full control of this market and having us look higher. If the bears can hold this 55.32.27 area or this 55.65 area, the 5.5 or 618 retrace, anywhere in there and turn down, we could see a more bearish setup if they can give us 5 waves to the downside, or we can see this B wave that I have on the chart that has been our primary count for a little bit here, where you have A, B, and then C down into the 53.28 area or so. Possibly a little lower than that into the 764, which would come in down here at 52.50. So that would be the primary count, is this ABC holding that 55.30 to 55.60 area and then turning down. The only issue with this count is the Nasdaq, and I've covered that, but we'll go over it again when we get to the Nasdaq and why that's a little bit of an issue for this count. Now, if they do decide to drop it directly from here, they still have only gotten to the 5,500 area, which is the 382 retrace. This is a perfect wave 4. If we're talking about the move down being 5 waves, where we have 3, 4, 5 of 3, 4, and then we'd have wave 5 down. We'd look for that 53.30 area for that, and then we'd look for a bounce after that. So a direct move down would take us down towards 53.30. And that would be our next target to the downside. So still potential for the bears to take control and turn this into a bigger correction. But right now it is bullish until we see 5 waves and then ultimately the April lows break. Over on the Nasdaq. Okay, so on the Nasdaq, it's been weaker overall. It was deeper in its drop here. It got all the way to its April lows and actually poked below them. It was weaker in its bounces. It didn't get over the 764 like the ES did. And it was deeper on this drop, hitting the 618 where the ES only hit the 0.5 retrace. So the Nasdaq has been deeper. And this is the issue I was talking about on the ES. If we're in a bigger move down, the Nasdaq has already hit its 618. So if we're looking for a B wave bounce and then down, it is possible they can hold just below this 764 and still give us that and go higher, but it doesn't really line up the way you would want. 618s are not A wave targets, so you would not expect this to be an A wave down and then a B C. You would either look at it as all of B or completing a wave 3 with a 4-5 to come, and then looking lower overall. So those potentials would be that we made an A wave up. This would be all of B down, and then that C wave towards 22,000 would be the bullish count. In that count, the bulls would first need to get over the 18,953, then 19,063 area. That gets them through most of these very key levels here, these breakdown candles, as well as the key fibs. So that would be the first step, and then ultimately the bulls want to break over 19,639. If they do that, they'd be looking at 22,000 in a more direct route. Now, they have not reached their 382. It's at 19,000. They were just short of it today. Well, they were about 150 points short of it, but at any rate, they were short of the 382. That would be where we'd expect a wave 4 and then a fifth wave down. In that case, this would be a leading diagonal, but everything else lines up pretty well. So that is a possibility for a 5-wave down move that would turn the market very bearish. From there, we'd look for that to come down, test the lows, bounce in a corrective manner, and then turn down from there, giving us a bigger breakdown overall and a much bigger correction. So Nasdaq has a couple different paths. It's not fully clear because of this A wave down. Can it be a wave 1? It could be a leading diagonal, sure, but I don't trust diagonals, so it's not fully clear that we're in a 5-wave structure to the downside. One more low, however, would look a lot stronger for the bears on the Nasdaq, so that is something to keep an eye on with CPI. And a big bounce here can come up to the 19,639 area. Above that becomes very bullish. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it and become part of our trading team before you ever spend a penny. You can cancel at any time, and you literally have nothing to lose by checking us out. We also have our educational material, our Elliott Wave 4 Beginners online course, as well as our Advanced Elliott Wave course, where you can understand all of these fibs, these key levels, and these patterns that I go through. In the advanced course, we go through all of the more complex patterns, like your double and triple threes, your flats, your triangles, your diagonals, which are very common in the market these days with the corrective structures, and the advanced fib levels. These are helping traders understand these complex patterns. As you can see on the screen, the traders are loving it and using it to navigate this impossible market. But if this is a little bit too complex for you or you're just getting started, we also have our Elliott Wave 4 Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up. And that's because Elliott knew that the news cycles were garbage long ago. He knew that key levels mattered, and he knew what happened when they broke and what happened when they held. This gives you a huge trading advantage over the rest of the market. Now, this course here is 25 videos where I go through 3 different parts. The introduction, where we go through your expectations, your mindset and emotion, the KISS method and why this works. The chart setup and tools, where we go through each tool we use with Elliott Wave, how we use it and why, as well as the Elliott Wave 4 Beginners area, where we go through each of the waves, how we measure them, the theory of alternation, corrective depth theory, the pivot, everything you need to know to make sense of this complex market. Now, the cool thing about both of these training programs is if you want to get them both for a discount, you can simply get our bundle pack and get $37 off. However, if you don't want to pay anything at all, simply join one of our monthly rooms, as those courses are included in the cost. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through all of the charts, all of the counts, let you know where we're at, give you a big picture view, and answer all of your questions. And you also get the training material. You just saw we trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. Now, if you're looking for individual stocks, futures trading, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading method that crushes the market, as well as his reduced risk binary method that gets you in at a cheap price and get you big multiples on your money, and it's how he structures a trade that's so unique. It's something you can see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for today. CPI is set up to push higher. 55.27, 55.47 are the first two levels for the bulls to get through. Ultimately, they need to get through 56.05. Now, the problem for the bulls is the structure does look corrective. So if that is the case, we would look for them to hit one of those levels and turn down strongly and make potentially another low in this 53.28 to 52.50 area. Over on the Nasdaq, also poised to push higher here into CPI, 18,843 and 18,953. Up to 19,063 are going to be your key levels for the bulls to get through originally. If they can get through those, they ultimately need to get through 19,639 on their way to 22,000. However, the structure does look corrective, so we would expect them to hold one of those levels and turn down, giving us a much bigger pullback and potentially even 5 waves down. Guys, that is your market update for today. I'll talk to you tomorrow.